Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. Mic check, everything is all good to go. All right, let's shoot this video so we could get this all dialed in and I could go eat. It is the holy month of Ramadan. I am a Muslim man, and in this month we do not get to eat anything from sun up to sundown. And it is running on 6 p.m. I don't get to eat anything until 7:30 tonight, 7:27 or something, 7:28, whatever, whenever sunset is. So I am drained. So excuse the video if I don't explain everything correctly, because I am famished. But famished, who the hell says that word? What is wrong with me? But anyways, seller cost, buyer cost, what are closing costs, and who pays for what, and how do you pay for it. So let's go ahead and go with the seller first. Okay, I'm going to try to make this video very briefly and try to get straight to the point. Seller costs. The seller costs are pretty much like commissions. Okay, you do not really pay much anything other than you have to pay off your mortgage. Now, the mortgage that you're going to be paying is going to be through an escrow company. The escrow company is going to go ahead and take the money that the buyer is going to go ahead and purchase it from. So the loan that they're going to get is going to go into the escrow account. From the escrow account, it's going to go ahead and get paid to the original lien holder, which whoever that might be, or if it's paid off, it's going to go straight to you. But the mortgage is going to be the first thing that's going to go ahead and pay. Number two, what's going to get paid is going to be any liens that are still on the property. Like, let's say you have any tax liens, mechanic liens, or anything like that. That is going to be number two that's going to get paid as far as closing costs. Number three, it's going to be commissions. That's going to be the commission you pay for the seller agent and then the buyer agent as well. So the agent that you have you hire to go out and sell your home, that is one part of it, whether it's 2.5%, whether it's 3%, whether it's 1.5%, whether it's a flat fee, it doesn't matter. It's however you negotiate with the real estate agent that is actually selling the home. Or in the case if you are doing a for sale by owner, which is also in the world of real estate, we call it a FSBO, then you're not paying anybody except yourself. And hopefully you didn't get out negotiated by the buyer agent. Then, of course, then we're going to go ahead and go on to the next one, which is going to be any type of transfer taxes. Now, these are the transfer taxes is just going to be the amount of taxes that you would pay that is going to transfer the amount from one person to another person. That's all it is, right? Buyer to the seller, seller to the buyer, right? It's pretty self-explanatory. But to understand all of this, I'm giving a very, very basic outline. All of this stuff, right? All of this stuff is very negotiable. So within your contract, you could actually have a bunch of other things that are going to be entwined with it. Like, for instance, let's say if you have a concession that you're going to go ahead and pay for, a credit, or anything that you're going to go ahead and negotiate in a contract, these are things that you are going to have to go ahead and add on to whatever it is. If you're covering any of the appraisal, if you're covering any of the inspections, that is going to be a negotiation between you, the buyer agent, your seller agent, whoever you're working. Hopefully you have two agents that are actually, on the same page of things to go ahead and help you out, because they have what's called a fiduciary responsibility to you, and then you can go ahead and go from there. But as far as the gist of it, that's pretty much what you're going to go ahead and pay for as far as the seller goes. Now, the buyer agent. Now, what are you going to be paying? Now, the buyer agent or the buyer will go ahead. Your buyer agent will tell you most of these closing costs. And so what are you going to pay? Well, number one, it depends on the loan product that you have. But the number one thing that you are going to go ahead and pay is going to be an appraisal. The appraisal is going to be the one that is going to be, that's a fluctuating one right now, okay? Typically, an appraisal cost is between, let's say, $400 to $600. But currently, we're sitting at April 2022, and if you don't know, which you wouldn't know, because why would you? You're not in the real estate business. We do have a shortage on appraisers. Shit, if you really want job security and you want to get into a career field, go and become an appraiser. You'll be set. You don't really deal with too much, and people are always trying to get appraisers out there. And then if you are really that high strung on or not high strung, but if you're really that backlogged on appraisals, and they're really, really desperate. Like, for instance, the most I think we had to request on a payment on an appraisal was like, I think it was like a couple of grand. It's a lot. when there's not enough appraisals and we need to close the loan and somebody's asking for a lot, it's all going to be dependent on you if you're actually going to pay that appraisal or if you want to wait extra because you're at the mercy of what's called a rate lock, right? If your rate lock is only for 30 days and we're on week 2 and they're giving you a projected appraisal of like, let's say 32 days, that means that by the time we get the appraisal done, then we get the conditions cleared. Then once we get the conditions cleared, then we have to go ahead and send out your CD, which is your closing disclosures, which gives the whole breakdown of everything as far as the adjusted cost to your loan product. Then we go ahead and send. After we do that, we have a 3-day waiting period. Then from the 3-day waiting period, then we have 4 days to go ahead and fund. These are all days that you're going to have to pay for every single day. We have to extend that rate lock. So people have to pay. So is it going to cost me more to go ahead and rate lock it for an extra 7-8 days? Or is it going to be cheaper for me to go ahead and just pay the extra appraisal? Typically, it'd be cheaper to just pay the extra on the appraisal. But then number 2 is going to be your inspections. Whatever inspections that you might have. Number 3 is going to be any prepaids that you have. Okay. Number 3 is going to be any prepaids. Now that goes associated with any homeowner's insurance that you have, any taxes that you might have, any settlement costs that you have. Now what's a settlement cost? That's going to be your title, your escrow. These are all people that have to get paid in the course of you purchasing that loan through a mortgaging product. If you are paying it out of cash and you're doing no contingencies and none of that stuff and you don't care about title and you're a baller like that and you're just, that's how you got it, then that's a different story. Then you just honestly just need to do escrow, and then escrow is the only thing that you need to pay for if that's a route that you want to go ahead and take, and that's where you're at in life. But for the most of us, including myself, we have to go ahead and look at prepaids, which is your settlement costs, your title, your escrow, your homeowner's insurance, all this stuff that we need to go ahead and get prepaid, hazard insurance, earthquake insurance if you have an earthquake insurance, a sewer lateral inspection, depending on if you do have a place like Oakland. If you're in Oakland, California, you will need like a sewer lateral inspection on some of the properties over there because that's the thing. It's an old place. A lot of old places will have a sewer lateral inspection that would need. If you have a septic tank, that'd be a separate inspection that you will need. Then number 4 is going to be any origination charges, the underwriting fees, any one of those. These are costs that are going to be associated with purchasing of the mortgage. The mortgage is going to be entwined with purchasing the real estate, right? So they're all hand in hand. So you have your settlement costs with your title, your escrow, you have your appraisal, you have your inspectors, and you have your any prepaids that you have. If you have an impound account, then you're going to have to set a specific amount of money depending on what time of the year that we have. Sometimes it's 3 months, sometimes it's 6 months, sometimes it's 9 months. It all depends. It's all a variable, right? So those are the costs that you are going to have to do. Now, can you entwine one to another? Can you say, hey, seller agent, can you go ahead and give me a $5,000 seller credit to go ahead and compensate for, this cost, right? Or that cost. It doesn't matter, whatever cost you have. Now that's the job of your agent. Your agent should be able to go ahead and do that for you, to negotiate it. And that is all going to depend on how long the house was on the market. How desperate are they to go ahead and sell it? Are they really trying to get out of it? Foreclosures are usually, like if they're pre-foreclosure, they're trying to get out of that house as quickly as possible. So if they got to lose a little bit on it, these are things that your agent should go ahead and help you out with that. But typically, you have your commission that you have to pay for your agent on the seller side. You would do any transfer taxes, and you're pretty much dialed in. If you want to help out the buyer agent, you could go ahead and pay for some of the inspections. You could pay for some of the appraisal if you want. All that stuff is all negotiable, but that is what closing cost is, and who actually pays for them. Buyer agent, seller agent. Explain to the buyer what he owes. Seller agent explains to the seller what he's going to go ahead and pay. Or if you watch this video, you already know. So if you like the content, like, subscribe, comment, all that other good stuff. Hit that bell notification so you get some more information about anything real estate related. Doing this thing that's called the Google Certificate Program from A to Z. That's going to be something that'll be fun. It'll be a little series of episodes that we go ahead and do. We also do taco reviews if you want. I do try to look for the best tacos. One man trying to do a lot of this stuff, and I got a family that is trying to kill me slowly. But if you want up to 50% commission rebate on purchasing your next home, 0% listing fee on selling your current home, or any mortgaging product, and I'm talking about any, like we have 100% financing, we have lease to own. Nobody does lease to own. I have lease to own. So what is a lease to own? A lease to own is just, if you want to purchase a house, but you're not sure if you want to purchase a house, we'll go ahead and lease it to you. And then after a couple of years, if you decide that you like it and you want to buy it, the amount that you put into it, we go ahead and put it on to the principal of the loan, and you are on your merry way. So, any mortgaging product, link in the description below. If you like the intro music, I am going to go ahead and gladly put the intro music all the way throughout the end of the video, so you can go ahead and like that. If you don't, dislike it, or anything in between. Till next video, guys, thank you so much for watching. I appreciate it.